The Nasdaq 100, the S&P 500, that's what we're discussing here now. Before we jump crazy into this, let's talk about a broad view of where we've been, right? We're breaking up below key levels, right? You had your August 22 highs. You broke below that on the Nasdaq. ES, you've broken basically below all your major ones already at 4,300. Now you're pushing back, below 4,200. Then when we look at the writing on the wall as well, we look at VIX pumping back above $20. You look at what's happening with banks, what's happening with big money. You get news on the day that Jamie Dimon is looking to, sell a large majority of shares, right? He still has a lot of shares, so I don't want to say he's liquidating everything, but he's looking to sell 1 million of his JPM shares as the CEO. Now, again, I don't think this is regarding retirement or any crazy ideas along those lines. I think he's just securing some of his own future, securing some profits gained. But also, it's important to know this is the first time the legend is selling. Okay, it's also not coincidental that we're seeing XL left the banking sector get absolutely decimated, lower highs across the board, and you're already almost back down to those lows that we had back during the banking crisis. So the question is where are we going? How are we going to move there? And ultimately, is there a bottom in sight right now? Hopefully, I can break that down, give you an answer. But ultimately, hopefully, we can find some opportunities in this market right now as well, because that's what you're here for. You're here to find some equity, some short opportunities, some buy opportunities across the board. What looks good, right? And where are we going from this? So hopefully, we can do that. Also, I want to ask you to consider liking and subscribing. It helps out tons. I appreciate all love and support. Also, too, the Discord link is down below if you are interested. But what I will say right now is the overall newsletter, right? Just to let you know, going into this week, what did we say, right? Should the downward trend persist, keep an eye for further declines towards the target, right? 41.71 was a really big one. Now, coming into today, that was a really big level yesterday, right? Where did that level come into? Right back here. 41.71, the top of this little range we mentioned in the video. This was mentioned and given out for free on Sunday, right? 41.71, you stay there, you broke down, we got back below that, right? So keep an eye on this coming week's newsletter as well. Going down to the Nasdaq, what we're looking at here, breaking below 14.584, right? 14.6 on Nasdaq, right? What were we saying? You break that level, you're going to get bad. You're going to move down. We're getting below the 200 SMA as well. So again, newsletter, it's absolutely free. Comes out of my pocket, not yours. I would subscribe. Again, we're not selling you anything here. It's all free content, giving you charts, updates, everything throughout the week. So make sure you pay attention. Those links are down below. First thing I want to do is look over the daily chart here. Now, the major levels we were watching was breaking below 14.6 and then most likely pushing into the 200 SMA. Now, what I did not expect this week was to lose the 200 SMA in almost one go. So when we zoom here on the daily, I think the daily candles give us some of the best viewpoint of pressure that's kind of being applied here. You see the 200 SMA right here. You're clearly getting below that in a very weak candle here on the day. The 15-minute gives you a little bit of a better perspective on the day, right? So here in the pre-market, we basically right here, you get the nice push back up to 14.4 last night, this morning, and then boom, you come back down in the day down here. Very weak, not what you wanted to see. The best example of what I can give you is looking at something like SPY. And again, I love giving previous examples because it gives you an idea of what to look for when we're getting the breakdown on the next equity, stock, or index. We look here and we see SPY loses it, right? Very kind of similar candle what we're getting, right? We got a weaker candle right here for Nasdaq, but you push up, reject again, and then push back down. Now, Nasdaq, again, I'm going to tell you right now, this is a bit weaker because the candle here and then getting this one right here. And we might get an inside bar coming into Monday morning, which would be even less ideal. So when we're performing here, it puts all eyes on this coming week's data pulls, right? So this morning, if you don't know, we had PCE. And basically everything came out at expectations. Regular PCE, that's not core. Core is the important metric, right? Came out at 0.4, a little bit higher than expected. What I will say here, and you also had Michigan expectations coming a lot higher than expected as well as far as inflation expectations. 3.8 rose to 4.2. You do have a Fed meeting this coming week, right? November is starting. Some would say winter is here, okay? Also on top of that, you have Apple earnings on Thursday. I have not been shy about my opinion on Apple's earnings, right? Apple has done some pretty bad things, and I'm going to go somewhere, so listen to what I'm about to say on Apple. Apple, if you look at the daily time frame, and I like using the higher time frames because it gives you a better visual here, you're below the 200 SMA. The last time we broke the 200 SMA here, you went from essentially 160 down to 152. You got a bounce, rejected again, and you proceeded down into lows of 124. You broke it again back here. We went from 160 down to lows of 130. Okay. Now, where this gets more interesting is we look at what's happening and what's coming up this week. Earnings. If you don't know, basically Apple in China is getting decimated. If you don't know as well, they're basically banning the iPhones based for privacy settings for all Chinese government officials. Okay. China is a pretty big country, so there's a lot of government. This also is rumored to be spreading to just citizens in general with what China is doing there. That's more of a rumor, so loosely take that. But if you look at what China is doing with their, their national credit ratings, giving, their social credit rankings as well, when we look at that, it ties right back into privacy and China wanting to oversee all this. This is bad. That's why we're seeing Apple sales, again, getting hammered. We saw even Tesla sales getting hammered in China as well. And we look at Tesla and what's happening there, right? Tesla, very, very, very far down, right? You've almost dropped 30% from, actually closer to 40% from September highs, from 280 back down to almost 200, right? This is not good. So again, I want to highlight the big impact that China will have. And I don't know if China's going to be able, or Apple's going to be able to make up some of this downside here with this earnings report. We'll see, but ultimately it looks very weak. You kind of have like a bear flag playing out here. It's a little bit ugly, but I'd be watching this, and you're really watching to see if you're going to get that push back into the 200 SMA and then a rejection back down. You also have Apple's scary fast event coming Monday morning, which I think will be a heap of nothing, but I could be wrong. I'm also not really betting on that, but it's important to just realize and have an overall stance going into that as well. Okay. So we looked at indexes, we looked at some of these equities and kind of the opinion there. Now, the one thing I'm going to say about SPY. Now, I said yesterday 412 to 410 is your level. Now, you're kind of flipping back below 410. This is not good. Now, if we zoom out to the daily chart here, we can see this is the level we've been kind of trending at. It has been like the line in the sand. You're kind of getting below that now. You go to the 5 minute, we look what's happening. You broke down, you got to retest at the end of the day, and that's where we're at. Now, the next level from here is around 404, but it's not that major. You look at something like the weekly, and you get a better viewpoint of where that next level really is and where you kind of, are aiming to go into. Again, 403, 404 right there, but the next level is closer towards 396 to 400. If you remember, 395 was a very major level as well, where we pinned for quite some time early this year as well. So I'm looking at 404 and then ultimately back below 400. Those are the next levels of downside if you're trying to aim for that downside. Now, again, people keep saying, Tyler, I think you're getting a little bit too aggressive to the downside. When it comes to shorting right now, I think you actually have one of the easiest setups there is. The 200 SMA on the Nasdaq. So when you're looking to go short, you're looking just to hold below that. If you get above that, you don't want to be short. The end. That's the story, right? You saw tech be a little resilient this morning, but as long as you're below the 200 SMA, you are looking for downside. The next target here is 13.9 at the very minimum, down to 13.7. That's your next range. This is very illiquid. So if we start selling, it will come quick and it will be ugly. Understand that. The dollar also too. This is something that we've been talking about. The dollar continued to make lower lows here, right? But you continue to bounce from those lower lows. When we look at the daily, something we have to mention is the potential for a bull flag, which we highlighted the day before yesterday, I believe. Okay. If this breaks out and pushes up, breaks above 107.2, I think you have a lot of concern on your hands. Again, you look at something like oil, again, bouncing at that $82 level like we mentioned yesterday. This is not what you want to see. If oil rises back up, I do think inflation numbers could start to take a turn for the worst as well. Now, also mentioning here, you look at IWM, something that we haven't been talking about a lot, right? And I don't know why more traders aren't talking about this. Today, I posted this on Twitter. The link for Twitter is down below. I recommend you check it out. But guess what? You made a new low on the year, and even from 2022. This was your 2022 low. You broke below that. So even from the giant dip that we had in 2022 on Nasdaq, ES, and the Dow, the IWM is now making new lows. Also, going into the Dow, if you look at the yearly chart now, guess what? Spoiler alert, it's now a red yearly candle. Absolutely disgusting here. So these are things that we have to be looking at. When we look at these yearly candles being put on ES, even Nasdaq looks better, but ES especially, you see the potential for the worst here. Okay. And again, I'm not trying to be a big bad bear. I'm just trying to make people realize the area that we're in. I'm seeing a lot of comments that the bottom is going to be in. We have to bounce. We have to this. The oscillators were oversold. The fear and greed index. At the end of the day, I'm not going to say that those don't entirely matter, but I'm going to tell you right now, fundamentals will trump most indicators. Oscillators, we've seen them be incredibly oversold and continue to dip down. We looked back here, everyone said the oscillators were overbought and we weren't going to go up, and then we ripped into new highs. So it goes both ways. You have to be able to, one, shift your viewpoint, shift your plan based on what's being given to you, but ultimately, two, you have to be able to take what the market's going to give you. Right? And if you're looking at this chart and you're looking at these levels here as well, and you're trying to wonder where these come from or how these can be marked out, and you're a newer trader, then listen to this. And before we go any further, I want to give a special shout out to the sponsor of this video and a new sponsor of the channel, Chart Prime. But what if I could tell you now we have something in a tool that's going to be able to give you all of our key levels or a little bit of a cheat sheet going into these as well. And then also breaking down massive levels you need to be watching for buyers and sellers in between the charts. Or what if you can also go into your chart, quickly identify the patterns that are there, whether it be broadening wedges, head and shoulders, double tops, or anything along those lines. And one thing that you guys know is that I'm never going to stand behind a product that I wouldn't use myself. That's why every single day I am officially going to be using Chart Prime and these specific indicators to help us on the live streams and in the daily videos to make charting quicker, faster, and of course giving us advantage to see things that we may have missed that AI will no longer be missing. And this is just one chart. If you're interested, the link will be down below, and if you use our code, you'll get 30% off every single month. Make sure you check them out. And if you have questions, feel free to comment down below. Let's get back to the video. The last thing I want to do is go over a few equities and what we're looking at here. When we look at the 4-hour chart, there's not too much to say here on NVIDIA. Head and shoulders clearly here. You're breaking below 410. And when you look at this, again, I posted this on Twitter way earlier in the day. You bear flag back into 410, rejected and pushing back down. You want to get confirmation below 396, and then we can start easily pushing into 386, and then hopefully the 200 SMA there. Pretty good. That's probably one of the best looking trades there is. Tesla. Now, I've been talking about the 200 daily, but another level here is the 200 weekly moving average, right? The 1 week. So you can see the daily and the weekly are very close to each other. They're almost right on top of each other within $5, $10, right? You're now mounted on the weekly. If you break the weekly, in my opinion on Tesla, the next level you're looking at, I would say conservative 185, 186. My real target is closer to 178, 177. And I believe this could come in a hurry if you do break and flip below 207, the 200 SMA there as well. Again, I think it'll be brutal. I think it'll be quick. I think it'll be fast, especially with what's happening in China and especially with what's happening in Tesla's price points and their margins on their vehicles. It's not looking good, and their earnings were absolutely atrocious. That's my viewpoint there. I think NVIDIA and Tesla are the best looking downside plays. My third runner-up would be Apple. Now, the best looking setup here is going back into your 100 or 200 SMA on the daily. That'd be the best setup, getting a retest of 170.5 and rejecting back down. And I could see us coming all the way down to 158. Again, some of these targets are a little aggressive, but again, I'm just giving my honest opinion here on the channel. AVGO as well. You broke below our key level at basically 842 down to 838. You bear flagged, you're right there. If NVIDIA starts selling off, I think AVGO will follow. If you break 810 on AVGO, you're going to start seeing a world of pain as well. Your 200 SMAs down near 750. That could come in a hurry as well. Those are my favorite names. Those are the ones I've been paying the closest attention to and the ones I think we need to be watching very closely. If there's names I'm not really looking to go short on right now, it's the strongest names that are performing out there. Amazon being one, Microsoft being another. Those are the two I don't really want to touch. I do like Meta to the downside if you get back below 289, but I'm only looking to go short if you are below 289. Understand that. Above that, it's just not worth it. It's too back and forth, and I think you can get stopped out easy. Under 289, you are very bearish on Meta. I'd be looking at that one as well. These are my favorite names. If you have questions, comment down below. I'll see you guys on Monday. Have a good one, traders.